Hey everybody, it's Pete. Welcome to Stock Trading Pro. In today's Stock Market Live, we have a plethora of things to talk about. We're going to talk about stocks that reported yesterday. We're going to talk about stocks that are reporting tomorrow. We're going to talk about stocks that are reporting today. But the big thing on tap today is the FOMC meeting. Jerome Powell widely expected to raise by 0.75 basis points. We also have Meta stock reporting today, and whether or not their investment in the metaverse and changing their entire company name is going to benefit the bottom line. We're going to talk about Google and Microsoft and how the market is actually cheering big tech right now, despite the fact that earnings were not exactly awesome. And we're also going to talk about another stock that is up $20 this morning after earnings yesterday. And that whole sector, that whole industry group of stocks, absolutely one of the favorite groups of stocks that our trading community loves to get involved with. I'm going to give you those stocks today as well. We have a bunch of stuff to talk about. We're also going to talk about, and one of the things that we really like to do with the stock market and stocks and stock picking in general, is we want to talk about going forward. Obviously, this week is a massive, massive week of earnings, right? Plus the FOMC, the market's kind of pausing. That's going to be a big thing we're going to talk about today as well. Is the stock market pausing on light volume for the next move higher, or is the stock market pausing on light volume simply because nobody wants to make a commitment ahead of what's going on right now, and there's just a pause waiting for something to happen? I actually have a pretty strong opinion on this, and we're going to talk about that in a second. So stick around. We have a ton of stuff to talk about today, a ton of actionable stuff. I think that's really the most important thing. Be back in just 1 second. Okay, so I had trouble with the buttons there for a second. Look, we're going to get right into, we're going to hop right into the market. The futures are actually reacting positively right now. You can see where we were yesterday. We're up 33 and a half, 33 and a half handles right now is what they call it in the market. And this is really what we're waiting on right now. The stock futures are rising ahead of the Fed decision. It's widely accepted right now that it's going to be a 0.75 point bounce. Now, if you're in the stock market and you have even just a little bit of knowledge about stocks, really what happens is the stock market is what's known as a discounting mechanism, where today's prices are actually forecasting where the economy is going to go forward. So if you have that in mind right now and you think about the way that stocks rallied last week and the way the stocks are pausing right now, do you believe that the stock market has bottomed? Is the big stock market crash of 2022 over? Or is it just a short-term rally coming off of lowered expectations, and they're beating these lower expectations, which is appearing to be good, but they're really not good? I want to wrap that all up right now. I think that we just had a short covering rally. I think it's very impressive that stocks have bounced for the better part of the last week and a half. I do think that the inflation part of the market still needs to work its way through. I know gas prices have come down quite a bit recently, but there's a lot that's going to unwind in the market. And we're actually going to talk about something that next week you're going to start to see a lot of conversations about, which is quantitative tightening. We all know that quantitative easing was a big part of why the market rallied for as long as it did with the money supply and the Fed and that whole conversation. Next week, we're going to start to see the shift from the Fed to earnings to quantitative tightening, and whether or not that's going to be the pressure that pushes the market down. So we have a lot to talk about today, but we're going to keep it simple. We're going to start out with some of the earnings from yesterday. Two companies that did not really report awesome earnings, Microsoft and Google, but those stocks are up anyway. We have one stock in the solar group, which again, that's the list of stocks that we trade very, very actively in our community. One of them exploded to the upside. This stock is up. At last I looked, it was $19 and something change. And then we're going to dive into Meta platforms today. And after they got beat up pretty good on the last two earnings, will they do the same thing again? We're going to take a look at all the investments that they're making in the metaverse and kind of moving away, not giving up on it, but moving away their shift of focus from ad revenue into what they believe the future is going to be. I personally believe that's going to be a completely different margin that they're going to have, getting into hardware, getting away from what they've been doing. We'll see how it unfolds. Last two quarters were not pleasant to that stock. So we're going to dive right into the charts. We're going to take a look at Google, Microsoft, and we're going to hop into Meta. But then I also want to talk about ENPH, and I want to make sure you have a big list of those particular stocks. I also want to talk about Twitter stock. Twitter stock is kind of just pausing right at that level right now after earnings. It seems the heavy short sellers are done with that stock right now. And Twitter stock has now paused for, I think, 5 or 6 days. Let's actually start out with that one, and then we're going to hop over into it because I want to make sure I give you plenty of ideas heading into the day today. So what we're looking at over here in Twitter is you can see the rally off of the lows, earnings came out, and now we're just kind of hanging out right at this level. So what I'm looking for in Twitter right now is it needs to get beyond this $41 level. We had a big conversation in our community last week about whether it was out of this pause, but then you got this resistance over here. Let me actually get this guy off the screen. And then you have this level up over here. So if we can get above 41, then I'm basically looking at 51. So that's the level that I'm looking at. I'm not looking to trade Twitter until it gets above 41, and then $51 is going to be my next target. I wanted to make sure I squeezed that one in at the beginning of the call. So let's head on over to some of the numbers from coming in from yesterday. So obviously, ahead of the Fed rate decision. Now, this is what's interesting here. Growth stocks climbing pre-market. Now, if you know about growth stocks are usually tech stocks. Tech stocks in their, well, let me take that back. Generally known as tech stocks, but growth stocks are anything really that is reporting growth in their revenue and growth in their earnings per share, quarter per quarter and year over year. Those are technically growth stocks. You know, this big conversation about value investing versus growth investing. They're both a function of the same thing. It's just you could buy value stocks that grow at a certain point, and are they now growth stocks? Anyway, with interest rates going up today again, which is a full 1.5 points over the last 2 Fed meetings, Jerome Powell is like kind of setting a tone there where those growth stocks, and specifically large cap tech stocks, which usually borrow money to fuel that growth, wouldn't you think that their growth is going to slow down because they're paying higher rates for that money that they have to borrow for the growth? Well, that's kind of exactly what happened yesterday. Alphabet missed. There's no other way to put it. Ad revenue slowed down. Their cloud reporting, which a big part of most businesses, including Amazon, not awesome. So you would think, right? Misses on it, revenue for the second quarter, all that kind of stuff. You would think that you'd be waking up today and you'd be seeing Google down, and it's actually positive. Now, what's super interesting is if we dial this in, the same thing that we saw over here, where we broke down prior to earnings in a massive level just ahead of this earnings announcement and big volume, right? This is super obvious. So I want to compare this to a stock that we just recently looked at, which was Citigroup. And you'll see that Citigroup did exactly the same thing. We were watching this level just ahead of the earnings here. The day before earnings, big volume, and you can see the volume spike there, which was the heaviest volume breaking down, which technically a breakout or a breakdown on heavy volume, typically we know as fuel. It's one of the candlestick patterns that we look at, and typically you get follow through. But we're starting to see a pattern here where these large cap stocks are breaking down, big volume just ahead of earnings, and then rocketing back in the other direction, which is quite frankly driving some people bananas that you're reading good technical analysis setup, doing exactly what you expect, and then they hop in the other direction, which is why our community, we tend to be a little bit less aggressive the day before the earnings announcement, and then let the dust settle, let the announcement come out. So for example, Google right now, Meta Platforms after the close today, Microsoft, we have Chevron and Exxon later in the week, and we're going to talk about those solar stocks right now. The way that we look at things with order flow and tape reading. So remember the 2 core pillars of what we do. Order flow is it obvious? And into earnings lately, it has not been obvious. And we can even take a look at Amazon, just to give everybody a little bit of a heads up, and how many of these stocks have been stuck in trading ranges. We kind of bring this out here right now. We want to really set the tone for whether or not there's obvious order flow prior to the trade. And you can see even Amazon here is kind of just stuck in a box. So if the 2 things that I don't know why I did that. The 2 things that we did is we're looking for order flow. And order flow first answers the question, is smart money doing something obvious? And that's the first part. There's no reason to look for an entry or any of those kind of things, or even talk about a trade if it's not obvious. Because if it's obvious, then you're just hoping something happens, as opposed to saying, nope, it's obvious. Now I'm just going to look for a spot to hop on board, which in our language is looking for the optimal entry. So we have, is it obvious, the optimal entry, and then the last part, which is probably the most critical part, is how do I know it's still valid? So in other words, how do I know when I should be exiting that trade that I found a good order flow, found the optimal entry, and starts moving in my favor? How do I know when that has changed? Now, what's interesting about a lot of these larger stocks, especially these large cap tech stocks, they're kind of sideways for the last 2 or 3 months, which means there's no dominant order flow. That's actually the right price right now. So kind of translating that back into the earnings announcements and looking at Google heading into we just got an announcement on, we'll take a look at Boeing in a second. But Google, prior to the announcement, again, broke down on heavy volume right below the support. But heading into that, we really had a 3-month window, maybe a 2-month window where that was the right price after all of this. So what does that mean? How does that translate into some short-term trades right now? And how do we feel a little bit more confident? Hey, I want to make sure I say hello to Brian. Brian, good morning, pal. And Daryl. Daryl, I hope you come into the community again. We liked having you in there. Steve Granby, that's a new name for me. How's it going, Steve? Good morning. Thanks so much. Cynthia, my friend, how are you today? And David, good morning. Good morning. And Juan, I got to make sure I say hello to little peeps inside of our community. So anyway, that means right now, since the longer term order flow is not obvious, and we all have to be in agreement on that, because if they're going sideways for 2 months, right now there's no edge other than the move down from the last earnings reports. Now there's day trading, there's swing trading, and there's position trading. Position trading is what we're talking about a little bit more right now, which is the flow of orders and the trend of price action between earnings reports. So right now, between earnings reports, we've been kind of sideways, and there really hasn't been a gigantic edge. So what does that mean for active trading? What does that mean if you're trading stocks, you're in the stock market, and you're looking for the best stocks to buy now or every day or for the week? We're really trading on those shorter time frame catalysts, which right now is the earnings catalyst. So we're going to, again, walk through exactly how to take care of the ideas that are unfolding now, the same way that we did last week. And we really gave you one very specific trade last week, which was Netflix. We might even have it still on the chart. So I want to give you the exact, this is what we're looking at. This is how we do it. No, there's nothing vague about it. We're looking for that. If it happens, great. If it doesn't happen, we just leave it alone. And that's a big part of trading as well. So if we go back to Netflix last week and we do a little bit of a deep dive, you can actually see that the opening after earnings, this was the day of earnings, right? And we opened higher right here. And we said that as long as where it does above and around that level, we're going to be okay with that stock and looking to carry that stock into the week, right? So we had these 3 days of price action after the earnings. So we had basically 208.50 up to 229. So that was a pretty decent move. But I want to be clear about this. In that particular situation, looking for a trade for the rest of the week, because today's Wednesday, looking for a trade for the rest of the week, a little bit more of a cash flow trade, a little bit more of a tighter window type trade, not a day trade. We're looking for an overnight trade, looking for that initial push off of the earnings. And if it meets our criteria, we're going to hang on to that and get some cash flow for that week. See our account grow a little bit at a time until this big picture clears up, right? So the trade that we said in Netflix last week is going to affect the trades that we're looking at today and the rest of the week and the rest of earnings. So if you remember, we were looking at this here and we said after it opens, we want to see it stay at the level after earnings. If by the end of the day it's staying there, then we are going to be looking to enter a position there with the opening price of the day that earnings came out being the level that we're going to use as our stop loss. So basically, this was going to be our entry and our risk, looking to hang on to that stock for the week. So even if we got involved somewhere near the end of the day here, that was still roughly a $12 trade that never moved against us at that point. It was just a question of how you manage your trailing profits, but we were super clear that it was a trade for that week. So what I'm trying to get across here right now is myself and our community, we're a little bit more short-term, anywhere from 2 days to 5 days in that window on the earnings catalysts that are coming out. And then as the bigger picture starts to unfold a little bit more, we get the FOMC out of the equation this week. We get some big earnings. Like I said, Amazon is scheduled to report tomorrow. Today we have Meta. Yesterday was Google and Microsoft. So we'll take a quick look at Google and Microsoft again, and then we're going to get into some of those earnings. So the point that I want to get across here is right now we are looking at 109 here in Google. So let's just say we're going to open up somewhere right around that level right there, right? As it opens at that level, we're going to look at the same exact type of trade. So it's going to open up a little bit higher. Now, this is the key to this trade. We want to see, does smart money come back into this idea after the market opens? It's one thing for it to be up there pre-market. It's another, the market opens, the bell rings, all this trading's going on back and forth. 6 hours of trading goes. You have your full-time job. Maybe you can't watch the market during the day. That's fine. Take a glance at it at the end of the day. If this is where Google opens today, if this is where Microsoft opens today, and again, I want to remind everybody, this is for educational purposes. This is what I'm doing. You have to make your final decision on your own. If it opens here, and then at the end of the day, it's above that price. So I'm just going to use round numbers. So let's say that Google opens up at 109, and let's say at 3:30 in the afternoon, it's up at 112, just to use an example, right? So that's $3 risk between where it is late in the day and the opening price. So you have to determine, am I okay with that kind of risk on that trade in exchange for what I could make on that trade? If you're okay with that, then the strategy that I employ is I'm looking to buy it at the end of the day, use today's gap up or higher opening after earnings, the earnings catalyst, as the reason I'm looking to buy, and then look for that trade for Wednesday afternoon, Thursday, and Friday for some cash flow. As long as it stays above that opening price, I'm good. Now, here's the other side of the trade, because we want to be super clear about the strategy. If it opens higher here at 109 and it's up here, we're good. That means that the strategy is doing what we want. If it opens up here at 109 and 3:30 in the afternoon, it's below that price, there's no trade. There's nothing to do. So what we're really looking for is we're looking for that earnings catalyst buying pressure, which we're seeing early in the market right now, pre-market. Is it still there? So we want to know, is the order flow valid after 6 hours worth of trading from 9:30 to 3:30 or whatever time you happen to be able to look at your trading platform? So that happened to work out last week in Netflix. It turned into a nice $10 to $12 trade, depending on where you got your exact entry. So that's the idea that we're looking at in Google today. But remember, this is so critically important. If it's below that price where it opens today, there's no trade. So that's very important. You can't trade simply because you want to. You have to trade because what you expected is actually unfolding. So again, this is not a day trade. We're talking about a multi-day trade into the end of the week, looking to capture that short-term move, that short-term catalyst, which is the earnings play. So if we work our way over, Google is one of them. Then we're looking at Microsoft. Microsoft, the same thing. You can see Microsoft is up here at 260 and change. So very similar. We're kind of still in the middle of this box, but you can see that we are right here. So the same thing. If Microsoft with big earnings and a breakdown yesterday prior to that stays up there, then that's going to map out the same play. So that's Google and Microsoft. Now, let's take a look at Boeing. This has actually just happened as we were talking. Boeing results fall short of estimates, but manufacturer still expects to be positive cash flow positive for the year. So let's actually do this in real time, see what Boeing's got going on right now. So Boeing has actually had a rally into the earnings. And actually, this has been one of the more aggressive stocks that our community has been trading. And it's actually, again, rallying 160 and change. So let's put this in context. It's right over here, somewhere in that area right there, maybe even a little bit higher. And we have the gap fill in Boeing over here, which that would probably be the first target, which is another $5 from here, and then some bigger resistance up in that level. So Boeing actually that's kind of cool to do that in real time right now. So Boeing actually has a order flow prior to that. So it's a little bit different from some of the other large cap tech stocks, which have really been doing nothing for the last 2 months. Boeing has actually been trending. Boeing's been trending. Now, does that mean that we just get in there and buy Boeing as soon as the market opens because it's had recent order flow? No. The same exact type of catalyst that we're looking for is we want to know, is that earnings priced in? The same way that we're looking to determine, is the Fed announcement priced in today? Which we're going to talk about that in a second. So this rally that we've had prior to Boeing and this news coming out, it's positive right now, as of right now, but will we see profit taking? So if you go back to the same strategy that we were talking about before, I'm part of what I do is day trading, but we're talking about longer term swing trading type of stuff. Boeing has a catalyst right now. That means the volume will be increased. That means the volatility should be pretty good during the day today. So we'll be day trading this actively in our community today, inside of our Discord community, and then looking for that same strategy at the end of the day. It could be very likely that there's higher opening in Boeing today, and it's not a gap. Well, actually, yeah, it is actually a gap. It is opening up above yesterday's price action. Could very well we'll see profit taking. So this is really where it's important. Remember what we talk about all the time, and by the way, if I'm providing some value for you, if you could please do me a favor. If you haven't done it yet, please do me a favor. Click that subscribe button. It would mean a lot to me. one thing that we want to make sure that we're doing right now is not fighting the tape. So if you're a tape reader and you're learning that kind of price action in tape reading, it's very important. And I wrote this in our email this morning where I said, look, I believe that there's going to be further downside. I think that the short-term rally that we're having right now is pretty good, but stocks have been going up. So I've been a buyer. So I'm not fighting the tape. So that's kind of the strategy that we're talking about right now with these earnings type plays. We're letting the earnings catalyst come out. We're letting price action happen. And then now we have our line in the sand. We understand now how to retape by leaning on that one price. And now we have a strategy for entries, risk, and the only thing left is potential profit target. But we're kind of using time as a profit target in this case because we're looking for a trade from Wednesday through Friday. Maybe make that same decision by the time Friday afternoon rolls around. And you might have some easier trades there. It depends on how you manage those positions. So that was kind of cool looking at Boeing as Boeing just opened. So now we got Meta, right? Meta's coming out. And see what we're looking at. So watch for TikTok fallout. So there's a lot of stuff going on with TikTok right now. Meta is coming out. And the whole conversation here about Meta is this. This is really the big part of the conversation. Let me actually zoom that in a little bit so it's a little bit easier to see. Meta continues to spend heavily on its multi-year project to build out the metaverse, a virtual reality environment for both work and play. So this is the big thing here of what they've done recently. So let's actually take a look at the chart of Meta and break this down just a little bit more. So Meta, very similar to what we've seen in a lot of these other stocks, heavy volume to the downside, right back near a breakdown level ahead of earnings. You can see it's actually up a little bit this morning with other stocks. But if we take a look at the last two earnings reports, we have here and we have this heading into earnings. So let's take a look at this move and what happened after earnings and this move heading into earnings today. Now, this is a really big level. If Meta comes out and they announce that the growth of their ad revenue has declined again, if then, that's a big part of trading, and you'll never be surprised when you map everything out, which is the most exciting and fun part of trading. If this happens, then I plan to do this, right? If Meta Platforms comes out and their growth rate on their ad revenue has slowed again, and if their expenses have gone out for the R&D that they're putting into the metaverse right now, that's not going to be good short-term or long-term for the company. They have to really recover from that, and we're going to need to see an uptick in both of those numbers. So it could get ugly for Meta today if those two things in growth rates are not what the market wants. Now let's pop on over to a whole group of stocks that our community just absolutely loves to trade, and we're pretty active in this one. So we're going to hop on over to that one, which is this guy right here. ENPH is the stock. Easily beats second quarter estimates with Tuesday afternoon, with earnings more than doubling and the solar power form guiding higher for the current quarter. Now, that's the big thing, guiding higher. Remember what we talk about, guiding higher is the future numbers. That's the going forward number guidance, right? So if we take a look at ENPH and we use the same strategy that we're talking about right now, you can see that yesterday it closed right around 216, and right now it's actually up $20.68. So we are kind of way up here right now in the 236 area, right up in that area, maybe even a little bit below that, but you get the idea. So now we have the same decision. We're going to talk about McDonald's from yesterday as well. Did everybody see McDonald's yesterday? It was absolutely amazing. So now McDonald's, we've been talking about that breakout level at 255, 255, 255. We've been talking about it for a couple of weeks. Blasted through it yesterday with big volume, but now I'm getting ahead of myself because I want to give you a bunch of ideas for today. So the same strategy that we're looking at, you don't want to chase this $20 move to the upside, because technically, what is your risk if you're buying this move to the upside? You're risking all the way back down here to the breakout level, which is $20 lower, basically. So you don't want to have $20 risk on this trade unless you believe that there's at least $40 to $60 upside potential and you're okay with that $20 risk. So one of the ways to be taking advantage of this, there's two different ways. Now, this is a big move to the upside. You probably want to have a little bit tighter window on your entry and your stop loss for this kind of thing. So what you can actually do is you kind of move over to a different time frame chart if it's possible, if you have the time to do that during the day. If you can't, then that, everybody has full-time work, right? This is when we might shift over to the hourly chart, the 60-minute chart, and start to look for entry patterns on the 60-minute chart, because it's going to be tightening up that $20 gap between where it closed yesterday and all the way up here. So if we take a look at what that might look like on this particular stock, and we go over to the hourly charts from the last couple of days, you would be looking at the 60-minute candles. So for example, we have well bid here with higher highs, higher lows. This would then be a much tighter window, which is basically $4 or $5 as opposed to the $20 gap that we are seeing this morning. But my gosh, look at how great that looks like on the chart. That's actually, if you know technical analysis, this is actually a giant ascending wedge where you start to have higher highs and higher lows like that. You start to see this kind of pattern and usually get a nice blast off. So 270 is the area up above that as well. So one of the other ones that I want to make sure that we talk about here is McDonald's. If you're a regular viewer of the channel, you know that we've been watching this 255 level. And just to give you an idea, again, it doesn't matter if you're day trading or not. I just want to show you the impact of how much the stock went up yesterday. Right here, look at that. That is a beautiful, beautiful picture yesterday. And again, one of the things I want to talk about here, which is kind of important, we spend a lot of time talking about the optimal entry and making sure that when you choose to take risk, that there's a good chance that the reward potential is going to be reached versus your stop loss. So McDonald's actually brings up a very interesting thing that I want to point out, which is making sure you buy at the right time. And I know John Oakes is actually on the call with us. He brought up a great question the other night on our coaching call, which is understanding, how do I recognize when it's too late to buy a stock that's screaming, and when should I wait for a pullback? And it really comes down to, you need to know what the stock normally does in order to understand, if I buy this right now, am I buying too late? And I think we can all raise our hand and say there's been plenty of opportunities where we find a great idea and we end up buying that idea, and as soon as we buy it, it goes back in the other direction. We get kicked out of the trade, stock, and then it goes right back in the direction that we expected it to. So yesterday, McDonald's actually had one of those situations where, as it rallied hard out of the opening, and by the way, this was actually one of our company setups right there. It's actually a double entry, perfect setup on the day trading side of things. This rocketed higher and actually hit near what it normally does early in the day. And now you get to this point where you're saying, okay, it's gone too far too fast. I don't want to chase the stock. And again, trend followers say it's never high. You keep buying higher and higher and higher. And yes, to a degree that makes sense. We also don't want to buy at a spot where it normally stops and pulls back. So this is a great example from yesterday where the pause needed to happen before the next move. And McDonald's actually gave a really nice $4 move for day traders at the end, and right at lunchtime, actually, which was a pretty nice move. So again, one couple of things that I want to talk about here. I just want to show you sector rotation, and then we're going to talk about quantitative easing, quantitative tightening, and why it should be a big part of your scanning and your Google searches over the next week, because you're going to start to hear a lot more about quantitative tightening, which is the opposite of quantitative easing, which is why the market went up for most of 2021 and rocketed higher as soon as they stopped and got off of quantitative easing. All that buying pressure in the market subsided, and that's where the market started to come down. Quantitative tightening is the opposite of that, which is pressure on the market and the money supply, which is going to change the buying pressure in the market. So we're riding the short-term coattails of the earnings season right now, which hopefully I outlined all of those trading setups for you, heading into this week. Now we have after this week. So we're just going to talk about that very quickly. First, I want to give you the sector rotation heading into today. Big part of what we do. We've actually been focusing a little bit more on energy stocks right now. And by the way, we actually got a really good question yesterday. If you remember on Monday's call, I had to focus on just a couple of different sectors, and they weren't all at the top of the list. It was where my focus was for trading this week. We had a really good question. And somebody said, why are you not looking at the two that are on top? And it really came down to, because when you're doing your nightly research every day, you not only want to pay attention to the stocks that are rallying or showing good order flow over multiple timeframes, like we're seeing here, order flow over the week, the month, and for a particular day. And you can see how the week is unfolded here. Super strong, cooled off a little bit heading into today. But this is not really an advanced thing. It's just something you need to add to your research when you're doing scanning or running alerts and those kind of things. You also have to pay attention to volume. So even though 2 days ago, energy was not necessarily at the top of the list, watching the volume on a day-by-day basis and actually trading those stocks we noticed that the volume increased even though they were not at the top of the list because the stocks have gotten beat up. So they didn't meet the criteria for order flow over time, but we started to see smart money activity in those stocks. So they've moved to the top of my list, and now they're actually right near the top as well. So it's kind of a thing to pay attention to. And, again, I could say, like, what does he mean volume? So we're going to take a quick look at that just to show you. So we're going to hop on over to the chart. If we take a look at the bottom part of the charts here and look at the daily charts, this is what we're talking about with volume. And what's kind of interesting here about this big move to the downside, smashed and then reversed on a heavy day volume, smashed and reversed on a heavy day volume. So this volume and this volume stopped this down move and started this big move. So we kind of noticed that in the energy stocks where volume is coming in, and crude oil was actually stopping at a very specific level, which last week I believe was 95. So I just want to finish up here with something that I think is very important for you to start to pay attention to, which is quantitative easing. Quantitative easing is widely blamed, so to speak, right now for the cause of inflation, which has had everything coming down right now and prices going up everywhere. So they're basically implying that the market rallied as hard as it did for 2021. This big move that we got here, this beautiful big move in 2021, was quantitative easing. Now the conversation is around quantitative tightening. And I'm actually going to post this. I'm going to put this in the link. I'm going to post this into the chat here, right there. And if you want to take a look at that. So what we're kind of doing right now is we're kind of like leveling up our stock trading game right now. We're saying, okay, this is great. We're going to pay attention to earnings this week. We're going to pay attention to the Fed today. And what do we do next week? So this is where you kind of just pour an extra cup of coffee and you sit down on a Saturday morning and say, okay, I want to read a little bit more about quantitative tightening and how I think that's going to affect the next 3 months, maybe even 6 months, maybe in the rest of 2022. Not necessarily a trading decision you need to make right away, but you want to be informed of what quantitative tightening means so that you can put together your new knowledge and the price action so you can make some confident decisions. I actually want to touch on this one here, my boring voice. If they only go 75 basis points, the market will rally really hard. Well, I can tell you this, in our community, for the better part of the week, we've been talking about manage the downside, PPC, protect precious capital, where we were very stock specific because it seems like a lot of the volume dried up in anticipation of what's going to happen today. So it's going to be really interesting after the market unfolds today. 2 o'clock today, the Fed announces. The meter is way up here that it's going to be 75 basis points, as was just pointed out. So now it's what is the expectation? So there's going to be the announcement, and then there's going to be all the language that they say after it and what they believe, hawkish, dovish. You're going to hear all that kind of stuff after the announcement today. We're going to get in there. We're going to mix it up, and then we'll see how we carry over heading into the next week. So there's a bunch of stuff going on today. Hopefully you got a lot of value out of today. Good strategy for the swing trades trading off of earnings. If you could do me a favor, if I provided some value for you today, if you could please do me a favor, make sure you hit that subscribe button. If you like today's content, make sure you smash that like button as well. But I think more importantly, if you have any follow-up questions about anything we spoke about today, make sure you leave a comment below the video, and I'll be more than happy to get back to you as soon as I can. All right. Have an awesome day, everybody. Let's see what happens with the Fed today. Meta earnings after the close today. Have an awesome day, everybody. I'll speak to you soon. Thank you for joining me. I really appreciate it.